Hey, what's up YouTube? Today we're going to talk about the stock of Alibaba Group. The ticker symbol is BABA. Alibaba Group reported earnings on May 13, 2021. They missed earnings, but they met revenue expectations and the stock got whacked by about 7% this week. So the headline on Seeking Alpha was Alibaba stock dips after mixed Q1 results with the profit miss. Alibaba reports mixed fiscal Q4 results with revenue topping estimates, with 64% growth year over year to RMB 187.4 billion, and adjusted EPS falling short of RMB 10.32, which is RMB 2.96 below consensus. So basically, they missed on earnings, but they hit it out of the park with revenue growth. The revenue growth is 64%, which is amazing. In addition to that, the mobile MAUs, which is the monthly active users, totaled 925 million. Guys, this is almost 1 billion users. They have almost 1 billion users of their app. They reported a loss from operations totaling RMB 7.6 billion, but this was mostly because of the RMB 18.2 billion antitrust fine from the Chinese regulators. As you probably know, Chinese regulators have not been very happy with BABA. They think it's a monopoly and they put a heavy fine on it. But without the fine, the income from operations would have been RMB 10.6 billion. Guys, this is a fantastic growth company available for a pretty reasonable price right now. The stock is hovering around $210. This is the ADR, which is the American Depository Receipt, not the one that's traded on the Hong Kong exchange. And I feel it's a bargain. Let's look at the stats from Seeking Alpha in terms of comparison against its peers. You can see that the revenue growth year over year has been 40%, which is fantastic. And the forward revenue growth, which is revenue growth for next year, that's 34%, almost 35%. The past 3 years, revenue has grown 42%. These are fantastic numbers. And in terms of the valuation, the forward PE of BABA is only 20. This is actually cheaper than the S&P 500 as far as I can tell. So this is a superior company to the S&P 500, but it's selling at a valuation which is cheaper than the S&P 500. Let's take a look at their earnings release from their website. I went to their website, I clicked on their press release, and this is it. This is their unaudited consolidated income statements, and if you look at the year ended March 31st, 2021, they made a total of 21 or 22 billion US dollars for the entire company, and their revenue went up from approximately 510 billion to 717 billion RMB. These are fantastic growth numbers, and if they keep performing in the next 5 years, if they double their revenue or double their earnings, their stock is going to become ridiculously cheap. Looking at their annual report over the past 5 years, we can see that revenue has grown quite a bit, from 92 billion RMB to 436 billion RMB in 2020. And we know that in 2021, this grew again to almost 700 billion RMB. So guys, this is a very cheap growth stock that I'm going to be buying. It's much cheaper than the American growth stocks, and I feel the growth can continue for a while. But it's really up to you. You're taking the risk for the Chinese government can put some regulations on this company, or it can fine this company. But that's the risk that we take. I feel it's a cheap stock and I'm going to be buying it. Good luck with your investments.